Hi there, this is Mitch Hancock. Thanks for watching this video. This should be the first video that you're watching because this lays out the fundamentals of what we're going to be talking about in some of the future videos that you'll go through and watch. So if we don't get some of these fundamentals down, you're not going to understand some of the following videos, and also you're going to miss some of the most critical components to where if you don't have this stuff, you're going to find yourself in a financial pickle if you're ever involved in an auto accident. You may find yourself where you owe tens of thousands of dollars in legal expenses and medical bills if you don't understand some of these basics. And so let's hop into the basics, make sure that we're all on the same page so that you can make an educated and accurate buying decision when it comes to purchasing your insurance. So let's jump right into it, shall we? So we're going to be covering liability limits today. Now you may be like, I have no idea what that means. That sounds super lawyerly. Well, let's break it down and make sense of it. We're going to draw some pictures and you're going to have to deal with my handwriting that would make a doctor's handwriting look good. So bear with me here. So in the state of Utah, before I jump in the state of Utah liability limits, what this means is your liability is what your legal responsibility is if you were to go out into the world and you were to damage somebody's car or damage somebody's property or cause bodily injury, or somebody has to have medical bills or medical payments because of some sort of injury that you caused them. So your liability limits are there to protect your legal liability or your legal responsibility if you cause damage to somebody else, whether that's injury or through their property. Make sense? Hopefully we're still on the same page. So what liability limits are in the state of Utah? The minimum amount, the lowest bar to entry in the state of Utah is $25,000, $65,000, and $15,000. At least at the time that we're recording this video. So what do these numbers mean? How do they work? How do they interact? So your liability limits determine whether or not your policy is good, bad, or ugly. So the first amount here, this is your per person bodily injury. So I'm just going to draw one person right here, little stick figure of somebody there. So per person bodily injury, I'll abbreviate bodily injury as BI. Okay, so the state minimum for this would be $25,000 of per person bodily injury. So if you caused an accident and you had one of these type of policies, your policy would cover up to $25,000 of medical bills for each person that you were to injure. Now, the total amount of medical bills that your policy would cover if you had one of these is $65,000. So we're going to draw a group of people here. That guy has a huge head, tiny torso. Again, you guys will be able to see that I went to art school. Very professional drawings here, right? Not really. So this is the total limit of bodily injury that your policy would pay out for. So let's walk through a scenario to help this make sense. So let's say that you're driving down the road and you hit a brand new Suburban that's got these three people in it. And each one of these people is injured to the tune of 25 grand a piece. At first you may be like, oh, whew, okay, we're covered because I've got $25,000 with per person coverage. But here's the problem. This is the cap of total bodily injury that'll pay out. So that is the total limit. So if each one of these people is injured to the tune of 25 grand a piece, that's $75,000 total, if I did my quick math right there. So the first person to file their claim, they're going to get their 25 grand covered. The next person to file their claim, they're going to get their 25 grand covered. But the last person to file their claim, it's going to be, sorry, bud, you don't get your full 25,000. So they're going to be short $10,000 here because the policy paid out 65 grand and there's 75 grand of total bodily injury coverage. And if you caused the accident, guess who's on the hook for that $10,000? You are. And there's a lot of people that I talk to who say, well, it doesn't matter, I don't have any money, so people can't take what I don't have. Well, that's wrong. You probably have an income, you probably have a job, or you have some sort of source of money so that you can survive. It is possible for them to garnish wages. It's possible for them to garnish retirement accounts. It's possible for them to take assets, put liens on your house, different things like that. And so this is why it's so important to understand how these work. The last number here, a little bit more straightforward. We're going to draw a little picture of a house. That's a house. Got cute little windows. So we've got a house right here, or we'll draw out a truck. Again, you can see that I went to art school. So this is for property damage. This is damage that you do to somebody else's home, somebody else's vehicle, somebody's business property. We had somebody that I heard about 2 years ago, to where they're driving through the McDonald's drive-through in their parents' SUV, and they took out the sign that you order from. And apparently those signs are like thousands of dollars to rewire and put up again. They had to close the drive-through for a couple of days, so there was lost revenues. This whole big deal. I had a family member just recently who had a rental property, and there's this person who was driving drunk at 2 o'clock in the morning and racing. Great combination, right? And they ended up veering off the road, plowing through a cinder block wall and hitting this rental property that this family member of mine owns. And so, example of property damage. The most common type of property damage that I see, though, is by far and large to somebody else's vehicle. So I draw a truck here because a lot of the trucks and SUVs that are out on the road now, they're so expensive. I used to sell cars back in the day, and there's a lot of vehicles that I sold that were worth, you know, 50, 60, 70, $100,000. And so if you only have 15 grand worth of property damage and you hit that new Suburban that's worth $70,000, do you think that that Suburban owner is going to be like, it's cool, you don't need to pay me back the other $55,000 that I'm out now that my Suburban's totaled? No, like this is a problem. The scary thing is that in the state of Utah, a third of Utah is either running around with one of these type of policies or no auto insurance at all. They're actually breaking the law. So scary, scary, scary thing to think about. So you want to make sure that you understand how these numbers work and how these numbers interact. There's one more quick thing that I'll explain on the basics of liability limits, and then we'll move on to some of the more optimum ways to set up a policy and make sure that you're properly covered. So these are what's referred to as split limits. There are some types of insurances where you can have what's called a CSL, a combined single limit. So you may have a combined single limit of, say, $300,000. To where rather than breaking it out for each individual type of damage or bodily injury, they just have this bucket of money and say, hey, you can take this out. So make sure you understand the difference. Typically, split limit policies actually have more liability coverage than a combined single limit. So just make sure that you understand the difference. Thanks for watching. We'll catch you on the next video where we'll go into more details.